Good morning, I'm Maiki Oreta. From markets to policy, from Manila to the world, we cut through the noise so you can navigate, adapt, and lead. This is Business 360. The United States is set to blockade the Strait of Hormuz after failed talks with Iran, raising the risk of a new global oil shock. The peso breaching 60 pesos to the dollar again. A fuel price rollback is set to take effect starting tomorrow, but any relief may be short-lived. With many unknowns surrounding the Iran war, what does this mean for the Philippines' energy sector? We speak to former Energy Secretary Rene Almendras later on in the show. And President Ferdinand Marcos Jr. is expected to announce today whether he will suspend or scale back fuel excise taxes. The United States will begin blockading the Strait of Hormuz tonight after peace talks with Iran collapsed. That immediately casts a shadow over global oil prices and a fragile two-week ceasefire. The U.S. military says the blockade starts at 10 a.m. Eastern Time. That's 10 p.m. in Manila. It will cover all vessels of any nationality entering or leaving Iranian ports and coastal areas. This includes ports along the Arabian Gulf and the Gulf of Oman. U.S. President Donald Trump announced the move last night after Washington and Tehran failed to reach a deal on Iran's nuclear program. He also warned vessels that have paid tolls to Iran could face action. And he said U.S. forces would clear mines which he claims Iran has placed in the strait. Trump went further, saying any Iranian forces that fire on U.S. or civilian vessels would be blown up. Iran, for its part, says any military vessels approaching the strait would violate the ceasefire with the U.S., which was meant to keep this route open for 2 weeks. The blockade is expected to send shockwaves through global oil and financial markets. For the Philippines, the risk isn't just access through Hormuz, it's higher oil prices and fresh disruptions to supply. We've reached out to the Department of Energy and the Department of Foreign Affairs. So far, no statements. Before news of that blockade, the Department of Energy announced a fuel price rollback this week, cutting diesel by more than 20 pesos per liter. A bit of relief for now, but with global risks building, how long will this last and is it even enough? Lian Bustillos reports.
After consecutive weeks of jumbo oil price hikes driven by escalating tensions in the Middle East, Department of Energy Secretary Sharon Garin announced in a Facebook post that a rollback in fuel prices will take effect this coming Tuesday. Based on the data release, diesel prices will decrease by 20.89 pesos per liter, gasoline by 4.43 pesos, and kerosene by 8.50 pesos, higher than earlier projections announced last week. The latest estimates put the price of diesel at around 120 to 150 pesos per liter, down from a peak of 170 pesos per liter. The shift in projections is being attributed largely due to the two-week ceasefire between the United States and Iran, but with peace talks ending without a final agreement, uncertainty remains in the coming weeks. And for GP drivers, the cuts aren't enough, with diesel prices ranging from 50 to 70 pesos per liter before the war. In an online video, President Bongbong Marcos assured the public that government is continuing to take action.
Kaya tuloy-tuloy naman ang ginagawa ng inyong pamahalaan para maibsan ang epekto nito sa inyong pang-araw-araw na buhay. Hindi po tayo titigil hanggat hindi natin napababa ang gasto sa biyahe, sa pagkain at sa kabuuang pamumuhay ng ating mga kababayan.
The president added that more measures and assistance will be announced in the coming days and weeks. Meanwhile, the DOE said that 329,000 barrels or over 52 million liters of diesel from Malaysia have been delivered to the country. This is part of the agency's emergency energy security program aimed at boosting fuel supply amid global oil market volatility. This follows an earlier delivery of 142,000 barrels or 22 million liters of diesel from Japan last March 26. The DOE assured the public that it will continue coordinating with government agencies and industry stakeholders to ensure sufficient fuel supply and protect consumers. Lian Bustillos, Abante.
For Energy Secretary Sharon Garin, fuel prices may stay above 60 pesos per liter and may never drop back to previous levels. In a radio interview, she said oil facilities in the Middle East have already been damaged and repairs will take time. So instead of a sharp drop, she says, expect a gradual slowdown, rollback over the next 6 months. Now, with a blockade threatening a key oil route, this is no longer just about prices, it's about supply and how prepared we really are. The Philippines relies heavily on imported oil, so any disruption is felt here almost immediately. Let's get a clear read on where we stand. Joining us now is former Energy Secretary Rene Almendras. Good morning, sir. Thank you for being here with us.
Hi, Maiki. Good morning.
Okay, let's start with the impact of this escalation. After 21 hours of failed talks, the U.S. is now moving to blockade ships linked to Iran in the Strait of Hormuz. When you first heard this development, sir, what first came to mind?
Okay, first thing I did was look at the oil prices. We went as low as 96.40 today. And when the announcements was made, we're now back to 104.20. So over $8 a barrel increase in a matter of hours. Mm-hmm. So I think it's really, the impact is really such that this is going to be volatile again.
Yeah.
So when the peace agreement was announced, you saw it dropped WTI from 112
Yes.
down to 91.
Yes.
And then within 2 hours, it went back up to about 96, 97, 98. So I guess it's the very nature of oil trading allows such volatility. Unfortunately, such volatility is not ideal for business.
Yeah, absolutely. Businesses hate the volatility. So what does this escalation mean for the Philippines in terms of fuel supply, sir?
The government has actually stepped up its own initiatives. They've done what's referred to as G2G transactions.
Government to
buying
government.
directly from
Yeah.
and getting governments to agree. So in our meeting at the palace, called by Secretary Recto, previous to our meeting, there was a meeting with the oil companies, and they came to the numbers that said, we have enough fuel until end of May, and we have enough crude oil until June. But that doesn't mean they stop doing that. They continue trying to close deals. They continue to buy. So I think for now, and it's the same situation in the whole world, actually. Supply is constrained, but the bigger challenge is the price.
Yeah, that's right. I mean, we are buying oil from Russia, we're buying oil from China. So supply is not the issue. It's just the price at which it's going to become available. How worried are you about the price pressures that are building, sir?
To me, that's the biggest thing we should be worrying about. It's how much can the economy, can our businesses handle or can live with. You see, there's always a lag time between the time that a fuel price spike, and then an equilibrium is reached. Equilibrium meaning supply increases or people cope with it, and everybody corrects their pricing to create that. So even before any adjustments can be done by the economy, the price sort of continues to go up or drop. So these things, it's a moving target then.
Yeah, and there are two huge variables. There's the conflict itself, and there is the long-term impact of this conflict that is so ambiguous. Talk to us about the confluence of these variables.
Yeah, you're so right there, Maiki. There are two things I worry about this crisis. One is the question of when will it be finished, okay? Or will there be a resolution? It's a question of time and how, okay? Sorry, I sit in an international think tank, and the views there are varied and worrisome as far as I'm concerned.
Yeah, tell us more about the views that are being shared now.
The idea here is, when will this problem be finished? Nobody knows, okay? And how will it finish? Nobody knows. The war can end, but Iran may control the straits, and they will continue to charge toll for every boat that passes by. So that's going to increase fuel prices again, because depending on what that is. Or will they limit the amounts of flows that they can? So there's so many unpredictable variables as to the determination of when will this end and how will it end.
Yeah.
The other bigger problem is This problem, this crisis took a spike, right? You know, we wake up one morning and U.S. attacks Iran and prices go up. I think it's not safe to assume that the price will drop in the same way. No. I used the term tail drag, and I didn't even realize that was a skiing term. But my point was that this kind of a problem, the solution is going to take time and slow. In other words, if the crisis went up like this and the solution is going to bring it down, it's going to be something like this. I'll give you a clear example. Just the other 3-4 nights ago, I was talking to the CEO of a major food company in the Philippines. And he was saying, Rene, you know, we haven't really felt. They're a direct importer of protein from abroad. Said we haven't really seen or felt a significant increase in the price of chicken in ex-Manila.
Not yet.
Not yet. So he says, I agree, not yet. I said, yeah, but let's look at it this way. The price of fertilizer has gone up very high. As a matter of fact, our own Department of Agriculture and many people are worried about food security because of
by
this
20
one.
to 40%.
President Trump himself, a few hours ago, also tweeted something unusual regarding fertilizers. So when the fertilizer price goes up, the farmer who used cheap fertilizer is not yet going to raise
now.
Is not yet going to raise prices. But definitely now that he has to buy more expensive fertilizer, the next crop of
And that's the
feeds.
tail drag that you're referring
Yes.
to, because
So
he's
the
going to
feeds
plant
go
it
up.
today using the expensive fertilizer, and that's going to be a while to harvest, and all of that will be inputted, charged back to the consumers. Many months from now.
Down the line.
Months down the line.
So you have more expensive feeds going into the poultry. So the poultry owner will now say, I'm paying more for feeds, therefore I'm going to raise the price of chicken.
Yeah.
And that's why the CEO of that food company and I agreed, you may start feeling the price of imported proteins going up maybe third or fourth quarter this year.
Yeah, we're going to be feeling the effects of all of this.
And then when
further
chicken
down the
goes
line.
up, that means restaurant prices go up.
Yeah.
So that's what I meant by the solution is not going to happen in one drop.
Correct.
Even if one point the price of oil is not going to drop, I think Secretary Garin made that clear. Went up, it's going to probably trickle down. But even if the price of fuel starts trickling down, the economic impact of today's crisis is still going to drag us down a few months.
Yeah, the dispersal on inflation. And sir, this is bad, the blockade on the Strait of Hormuz. But are you worried that Trump might bomb actual energy infrastructure of Iran? Because when you hit their capacity to produce, we all get affected.
Okay, let me explain why after announcing closing Strait of Hormuz, we're at 1.4, where in the previous announcement to annihilate and destroy a whole generation was at $112 a barrel. If you destroy the production capacity of Iran for oil, you're going to hit the world market because Iran is a major oil producer. Okay, it doesn't sell globally to everyone, but it sells to Russia, to China, and a few other guys, right? But if you're going to close down that capacity to produce, those guys are going to have to buy that oil from somebody else.
Yeah.
And then you're going to spike prices again. So I don't know how to say this. I don't want to say this is better than the previous announcement, but
it could have been worse.
It could have. I mean, if he continued with a threat to bomb all the infrastructure, the generating capacity and all that of Iran, we'd have $112 a barrel again, or maybe even $120 plus dollars a barrel.
Okay, sir, given that the Philippines imports 95 to 98% of our crude oil requirements, we are very vulnerable. And how does this level of dependence limit our options today?
I read a paper that listed the countries most vulnerable of this crisis, and we are there. Okay, in addition to 95% of crude, we literally import because we only have one refinery, Petron's refinery. So you bring in crude, you process it, you produce fuel. But we import a lot of fuel, diesel, gasoline, LPG from all over the world. Why? Because the refinery technology is about economics. The larger the refinery, the better the cost. So that's why the oil companies consolidated refineries in major demand centers. So we're very dependent on diesel price, not just crude oil price, right? Because we're buying fuel, finished fuel at global pricing at that. The other problem, Mikey, is one of the reasons why we're very vulnerable is we are a heavily importing country.
We import everything.
We import everything, including essentials. We import rice, we import protein, we import so many things. Now, can you imagine if I could produce rice in central Luzon, the logistics cost of bringing it to Manila is very different from the logistics cost. Even if I buy the rice from Vietnam at a lower price, the price of shipping that from Ho Chi Minh or from wherever it is to Manila goes up because fuel prices are up. So our vulnerability is both directly on the price of fuel, but on all the other related inputs that fuel affects, such as transport.
Yeah, and you know, every time when people talk to you, they think of energy first because you're former energy secretary. But I would also like to point out that you also came from the private sector. You were the CFO of an Aboitiz firm during the Asian financial crisis. You've handled multiple crises, sir, and with the private sector. How should the private sector manage this situation? How should CEOs and CFOs manage the risk and the volatility today?
Okay, a slight correction. I was treasurer in the Aboitiz group for a few years.
Okay.
If I were the CEO, and thank God I'm not the CEO anymore, I'm probably not going to sleep very well. Okay, but let me take the perspective. If I were the CFO of a company today, and I really worry about, I'm sorry, the big guys, the big corporations, they have
the balance sheets.
They have their ERMs, they have their business continuity plans, they have what it takes. So I'm more worried about the middle-sized companies all the way down, because we're now hearing of small businesses closing up because it just doesn't make sense to continue operating. So if I were the CFO, my first question would be, do I have the liquidity? Do I have the cash that I need to do this? So why do I need more cash? Because everything's more expensive. If a friend of mine who owned a gas station said, my working capital requirement before was only about 600,000 every month, because that's the volume of fuel that he has to buy. But today's price, it's over 1.2 million, almost double. So he says, I need more capital for that, right? So CFO, I'd worry about liquidity, I'd worry about debt, I'd worry about the balance sheet. But CFO, not that bad. Me, bigger headache, the chief operating officer. Because as chief operating officer, I need to worry about my raw material supply. I need to worry about the logistics of bringing it in, how timely it will be. I need to worry about my production costs because electricity is up and so on and so forth, right? So I think each business needs to cope with it in a different way. I think the call of the times is, entrepreneurs and businessmen, I need you to dig deep and say, I need that fighting spirit that says, we're going to get through this one way or the other. That's the entrepreneurial spirit. But the reality is you have to be nimble. You have to be able to adjust and move very quickly because the world is not going to wait for you. As we said, in 2 hours' time, oil price went $8 up, right? So you need to be able to maneuver quick and fast.
Yeah, and it's not just the private sector. I mean, we need to be nimble everywhere. This going back to our strategic stockpile, which we don't really have. How do we build that up constructively? We know where we stand. It's important to have a strategic petroleum reserve, as many other countries do. We don't have one. What can we do now to build that up?
One thing that the government is doing right is they are already buying both fuel and crude oil. Okay, let me explain. A few years ago, when I was Secretary of Energy, a big percentage of fuel distribution was still the big companies. Today, it's not. There's so many smaller independent fuel importers with their own gas stations doing that, right? So the big companies, they can afford to put a significant portion of their working capital on inventory, because that's, if you have 6 months of inventory, your capital is going to sit there for that duration, right? Well, the small players, number one, they don't have that much working capital. 2, there's also the question of storage. Where are you going to store these fuels when you're not yet going to sell them? Do we have the storage
dangerous
capacity?
Too.
So, direction you're asking me, one is, if money is available for working capital, then let's build up more storage capacity, more logistics capacity to be able to handle the additional reserves if we really want to build it up.
Yeah. Is zeroing in on the government, how do you think the president, how is this administration doing so far in handling this very difficult situation?
I'm so happy I'm not in government. I'm sorry, Maiki. To be very candid, I'm so very happy I'm not the Secretary of Energy. And I'm sorry, Secretary Garin, I promised her all the help she needs. I told her I'll be her bodyguard. But the reality is the crisis is so complex. There are just so many things that need to be done. I think there's a time for planning and discussions, but I also think it's time for execution.
Yeah.
You can have the best plans and best ideas, but if you can't execute it in a timely manner, sabi nga nila, the train has left the station. You don't want to get into that situation.
Yeah. Okay.
The faster we
let's
move,
talk
the better.
about execution and how to manage this crisis. The president is going to be deciding on whether to suspend fuel excise taxes today. We're looking at a 6 peso cut for diesel, up to 10 pesos for gasoline or LPG. Is this the right direction? And will it even move the needle, especially given the recent development?
Can I talk about what we did during the Aquino
please.
administration? At that time, we developed a playbook. President and I talked and said, these are the goalposts. This is the must not reach. We should never get here, okay? And so we calibrated steps or actions depending on the price, how it goes up or down. The problem with taking out taxes is you're going to benefit everyone in the Republic. And please don't get me wrong. It's not that I hate people or like some more than the others.
We just need a targeted approach.
It's just that if you roll back on excise and VAT, even the rich, and I'm sorry for the very rich who can really afford anyway, they're still running their very big vehicles consuming, full tank at 14,000 pesos. Whereas if I continue to collect taxes, I would have the resources to do very effective and very specific interventions where it is most needed. So I'm glad I'm not the President of the Republic. Those decisions need to be made. I pray for him to make the right decision. Those decisions should be made based on the view that they sit on. Questions like, how much fiscal space do I have? How much liquidity does the government have? Can I afford to give all the ayuda and all these interventions at existing levels? Because giving up taxes is equal to giving up ayuda, di ba? I mean, one is expense, you're giving up revenue. So this again is a complex question, and I don't have a clear view from where I sit on the decision on the numbers, which will hopefully make a good decision in that direction.
Yeah, it's a tough time to be in government now, especially because how they act, what they do, is going to affect the road to 2028.
I agree.
And I want to talk to you about that because this crisis just exposes how technical and complex energy security is. And when you look at the 2028 field, a leading front runner is Vice President Sara Duterte. Do you think that she has the depth and the qualifications to manage through situations like these?
I'm going back to something I learned when I was in government, and I actually read about this in a book that came from the U.S., about the U.S. government. It's not the president, it's the presidency. So you can have a really good president, but the people around him or the people helping him are not able to deliver. Or you can have a not so good president, but have a really hotshot cabinet team that can make things work, then you'll have a good presidency. So it's very hard for me to judge a person today on a future,
it's not just the
right?
person, it's the team, the
team.
broader
It's
team.
also, it's very hard to say, okay, these guys are not going to do well or this guy is going to do well, because it's parang predicting the future.
Yeah. Another thing.
What I do know is, agree with you, how this crisis rolls out is going to affect 2028. Our demographic structure is, the people on the lower demographic cut, by the way, is so huge, they're also going to be the major voters. They are going to tip the 2028 vote into a direction because of how they
felt
survive
this was
or
handled
roll out in
yeah.
this crisis.
Okay. Another thing I wanted to ask you, sir. At the same time, there's the impeachment push against Vice President Sara Duterte with fuel, inflation, and supply risks growing. Should policymakers, how do they balance that? What do they focus on? Should they not be focusing on that so they could focus on the energy crisis? What are your thoughts on the situation?
Okay, it depends who you are. If I were a businessman who has no political leanings, who has I'd definitely push for the economy. But then if you're worried about the future of the republic and the democratic institutions and all that, I guess you want to do that. If you're somebody who's in the field of justice or law, I'm sorry, it's a diversity of perspective, I think.
Yeah.
No? So me personally, I think this is the problem with complex situations. It's a prioritization, which one is more important than the other. That decision has to be made on the ground in the reality of the time and the constraints that's happening at that period. So it's very hard to make a judgment call on that, because that judgment call can be irrelevant 10 hours from now.
Yeah. Okay, we can ease up the pace a bit. Some practical advice naman for Filipinos that are dealing with this energy crisis. What are some fuel-saving tips that even you, sir, are implementing in your own home?
Okay, I think the sale of electric vehicles has just gone through the roof. A lot of people have been calling me. I said, no, I don't work I've retired. I'm no longer part of that group. They think I can get them an EV because the wait list is long. No, I think it's about efficiency. It's about planning your trips. It's about making sure that these are the necessities. It's the same thing with a business, diba? How do I cope with this crisis? First thing I should look at is my capex. If I don't really need to change this air conditioner today, then maybe I should not, because I'll conserve the cash, the liquidity for other things. So as an individual, if you're managing your household, the same issues as a company or a business. Also, I mean, it's the same for a household. It's about resource management. You want to be efficient. You want to be effective. You don't want to waste on things that are not absolutely necessary.
Yeah.
I saw a tip online about how to conserve electricity, which is during these summer months, just use one bedroom instead of everybody in their own bedroom having their own air conditioner. I mean, there's so many practical tips, like don't overload your refrigerator and stuff like that. So I think there's no lack of it. I'd like to think that in every crisis, there's also an opportunity, right? So some of the biggest winners in the Philippine economy are those people who took advantage of a crisis. I don't mean that in a negative sense. I mean that in the sense that there is usually a disruption in every crisis. There is changes to the economy, there is changes to consumer behavior, there's even a change in consumer preference and prioritization. If you're a good businessman, if you're a good, even a simple sari-sari store can make something good out of this by allowing or taking advantage of that disruption to further your enterprise.
Yeah, and be the first.
And be the first to go.
Be the first to do it.
I'll apply that to the household. Today, if you can afford it, going solar is not a bad idea. I mean, home solar. I was with the president of one of the banks. I can mention it. I asked his permission, East West, and he said, "Hey, Sec, we're going all out on financing home solar." That's really good news. Okay, meaning here's a bank, or here are banks who are now willing to lend you money to convert your homes into solar. Maybe not fully solar, maybe partially solar.
And every little bit helps.
And every little bit helps because it helps you now. You're deferring cash flows. I was worried because then that means I will spend capex today, but if somebody's willing to finance it, I mean, hey,
even better.
Even better. So you're delaying.
Helps bring people in that direction. As everyone is looking to tighten their belts, sir, how should the government be cutting its own fuel use in terms of official fleets, security convoys? What are your thoughts on how everyone across the board, even in the government, can tighten their own belts?
I'm sure government can contribute. I heard that there are already some guidelines that were issued. DBM has already issued some guidelines about how to cut costs and savings and all that. What used to take an hour and a half now takes 20 minutes. I couldn't believe Ateneo to Makati was 25, 30 minutes. because
The behavioral changes, yeah.
the behavior has changed, and essential travel has become exactly that. No, so yes, I think everybody can help, including government.
And your outlook for the next couple of months and how Filipinos should be preparing for this, sir?
My view is, in addition to being nimble, you need to be woke. I will use a millennial term. The worst thing that can happen to you is not knowing or not watching out for what's happening. So I think the Tagalog term is natutulog sa pansitan. That would be very wrong. As a businessman, even if you're a CEO or a CFO, you're an ordinary housewife, you do not want to be natutulog sa pansitan. It's going to be exciting times. We need to make sure we are aware of what's happening. We're aware of how the things that are happening will impact us, and then being able to react and do things to mitigate and live with the realities that are coming our way.
Be nimble, be wise to live with the realities of our time. Well, maraming
So
salamat.
they need to watch Maiki Oreta more often.
Anyway, thank you so much, sir. It was great to have you with us, sharing your thoughts on how we should manage this crisis. And nice to have you here. So thankful you're not in government now.
Yeah. Thank you very much.
All right. We're taking a quick break. More stories when we return. Business 360 will be right back. President Marcos is expected to decide today whether to suspend or cut fuel excise taxes. Palace Press Officer Claire Castro says an announcement could come within the day following cabinet talks on how to ease the impact of the Middle East conflict. If approved, diesel prices could drop by about 6 pesos per liter. Gasoline, LPG, and other fuels could see bigger cuts of around 10 pesos per liter. Under Republic Act 1231-6, the president can lower or suspend fuel taxes if Dubai crude averages at least $80 per barrel for a month. Any relief would last up to 3 months. Lawmakers are now pushing an investigation into possible collusion in the oil industry amid claims of excessive pricing at the height of this price shock. Economic Planning Secretary Arsenio Balisacan warned of what he called seemingly excessive margins, adding regulators can step in to probe possible anti-competitive practices. He also called for stronger coordination among government agencies. Former Senator Laila De Lima has backed that move, filing a resolution seeking an inquiry into rising diesel prices, possible profiteering, and whether existing laws still protect consumers. The push could trigger a broader review of the oil deregulation law and whether market abuse is taking place as global price pressures continue to build. The Department of Foreign Affairs, or DFA, says any energy exploration deal with China will follow the Philippine Constitution. It adds any agreement will uphold Philippine sovereignty amid concerns raised of Akbayan party list over the West Philippine Sea. The DFA also denies any secret talks with China on proposed changes to a joint Coast Guard agreement. Meanwhile, a business group says joint exploration could bring economic benefits to both the Philippines and to China.
It will reduce our energy insecurity. It will provide jobs. China will provide its technical expertise and financial capabilities, both of which the Philippines does not have. It does not mean that we are acknowledging that China already owns this body of water. So I think it is a win-win solution that we should seriously look at. The Philippines can negotiate, being the owner of this West Philippine Sea, for a larger portion of the joint venture, maybe a 60-40 sharing scheme.
The remaining ASEAN energy meetings this year will now be held online as governments look to cut costs amid the global oil crisis. The Philippines is also shifting to more cost-efficient and energy-conscious measures as the Middle East conflict continues. The Department of Energy, or DOE, says moving the meetings online helps use resources more prudently. It adds this will also allow the Philippines to stay coordinated with ASEAN partners despite the disruptions. The International Monetary Fund and the World Bank are meeting this week as the global economy comes under fresh strain from the Middle East conflict. The IMF warns a global growth downgrade now looks inevitable. Higher oil prices and disrupted supply chains are already dealing lasting damage. It also expects demand for financial assistance to surge to as much as $50 billion. The World Bank, for its part, says global growth could fall up to 0.4 percentage points. At the same time, inflation could rise by as much as 300 basis points. Both institutions say the outlook still depends on a fragile ceasefire. And they warn a prolonged conflict could deepen economic losses worldwide. Trump's blockade announcement now hangs over global oil markets. But how did we get here? What exactly unfolded over the weekend and why did the peace talks fall apart? Jillian Geronimo reports.
The United States and Iran failed to reach a deal to end their war after marathon talks in Islamabad, putting a fragile ceasefire at risk. The 21-hour negotiations followed more than 6 weeks of fighting that has killed thousands and driven global oil prices higher. Both sides blamed each other, with U.S. officials saying Iran rejected key terms, including a commitment not to pursue nuclear weapons.
We have been at it now for 21 hours, and we've had a number of substantive discussions with the Iranians. That's the good news. The bad news is that we have not reached an agreement, and I think that's bad news for Iran much more than it's bad news for the United States of America. So we go back to the United States having not come to an agreement. We've made very clear what our red lines are, what things we're willing to accommodate them on, and what things we're not willing to accommodate them on. And we've made that as clear as we possibly could, and they have chosen not to accept our terms.
Iranian media said there was agreement on a number of issues, but that the Strait of Hormuz and Iran's nuclear program were the main points of difference. The Strait of Hormuz, a key route for about 20% of global oil, remains a major sticking point amid blockades and demands from Tehran. Iranians expressed their disappointment as the peace talks reached stalemate.
They must yield to the demand of the people of Iran. They have surrendered in war, but they must surrender decisively and abandon their excessive demands so that this agreement can be reached, which is in their own interest. I tell to gambler, U.S. President Donald Trump, that you have lost this gamble badly. The sooner you end it, the better for you. Over the past 47 years, events have occurred that have made us lose our trust in Americans, both from their support for Saddam in the 8-year war, and the downing of that passenger plane in the Persian Gulf, and the sanctions they imposed on us, the assassination of our scientists. In any case, common sense cannot trust anyone like that. No matter how much we extend a hand of friendship, they will eventually stab us in the back.
The talks mark the first direct meeting between the two countries in more than a decade and the highest level since 1979. Pakistan urged both sides to maintain the 2-week ceasefire agreed earlier as fighting continues to threaten the region.
We hope that the two sides continue with the positive spirit to achieve durable peace and prosperity for the entire region and beyond. It is imperative that the parties continue to uphold their commitment to ceasefire.
Meanwhile, tensions extend beyond Iran, with U.S. allied Israel continuing strikes on Hezbollah targets in Lebanon. For now, both the U.S. and Iran leave without a deal, but officials signal that further talks may still be possible.
Diplomacy never ends. Diplomacy is always a tool for securing and safeguarding national interests, and diplomats must do their duty in all circumstances, whether in wartime or peace.
Jillian Geronimo, Bilyonaryo News Channel.
Up next, global markets, what's moving and why. This is Business 360. Welcome back. The peso is back at the 60 level on the first trading day of the week. It opened at 60 pesos and 25 centavos to the dollar, weaker than the previous close of 59 pesos and 95 centavos. This keeps the currency near record low levels seen in recent weeks. The Middle East conflict is expected to weigh on the peso this week as failed peace talks between the United States and Iran push investors towards safe haven assets like the dollar. Wall Street could come under pressure this week after the United States and Iran ended 21 hours of talks without a deal. That deadlock prompted U.S. President Donald Trump to announce a naval blockade of ships entering or leaving the Strait of Hormuz. Last Friday, U.S. stocks closed mixed as investors watched those talks unfold. The Dow Jones Industrial Average lower by 0.6%, the S&P 500 down by 0.1%, and the Nasdaq in the green up by 0.4%. Over in Europe, markets there finished mixed. The UK's FTSE 100 flat with a downward bias, as with Germany's DAX index and France's CAC 40 higher by 0.2%. Let's take a look at how local and regional markets are doing. As of 9:58 this morning, the PSE index is trading to the downside in step with other markets in the Asian region. We are down by 1.44% to 60.10. Volume is at 95 million, valued at just 1.3 billion pesos. Market breadth, very bearish. We've got 99 decliners, 48 advancers, and 58 stocks unchanged. Taking a look at markets in Asia this morning, all are trading to the downside. The Nikkei 225 down by 1%, Hong Kong's Hang Seng Index down by 1.2%, Shanghai's Composite down by 0.1%, and Singapore's Straits Times Index down by 0.3%, following news of that blockade. Now, in other news, the government is leaning heavily on local borrowing as domestic debt covered most of its February financing needs. Data from the Bureau of Treasury shows gross borrowings jumped 40.9% to 478.8 billion pesos. About 98% came from the domestic market. External borrowings, meanwhile, plunged 94.7% to just 10.5 billion pesos. Total borrowings for January to February reached nearly 887 billion pesos. Outstanding debt hit a record 18.16 trillion pesos. The shift highlights the government's strategy to rely more on local financing amid global volatility. So far, there is no plan to expand borrowing despite the conflict in the Middle East. Now, a Luzon-based fuel distributor is pushing through with an IPO despite market uncertainty linked to the conflict in the Middle East. According to a report by Philstar, the company is preparing for a possible listing this year. It plans to raise less than 1 billion pesos from the market. The firm is targeting the Philippine Stock Exchange's small, medium, and emerging board as it looks to expand its operations. Now, this move stands out as most companies are holding back IPO plans amid the volatile market conditions. Now, the International Monetary Fund is sounding the alarm, warning that artificial intelligence could expose serious weaknesses in the global financial system. It says governments and institutions are not yet prepared to handle these cyber risks. At the center of the concern, AI firm Anthropic, which recently unveiled a new model called Mythos. The company says the system can identify and potentially exploit weaknesses across major operating systems and web browsers. This, according to sources, as told to Reuters. U.S. Secretary Scott Bessent and Federal Reserve Chair Jerome Powell held an urgent meeting with bank CEOs last week, warning that these AI-driven threats could quickly escalate. The IMF says that the risks are not limited to the U.S. and could spread across global markets if left unchecked. We're taking a quick break. More stories that move markets when Business 360 returns. Welcome back. Property developer Neo Group is expanding electric vehicle charging across its office buildings in Bonifacio Global City as the demand for EV infrastructure begins to pick up in Metro Manila. The company says the rollout will cover all 7 of its office towers in Taguig. CEO Raymond Rufino says the move is partly driven by growing EV adoption, including within their own family. The expansion comes as more companies and tenants look for buildings with ready access to charging, a key gap as the country pushes slowly toward electric vehicles. California is courting Philippine jeepney manufacturer Francisco Motors in a move that highlights how global demand for clean transport is now pulling Filipino manufacturing abroad. The state's governor's office of business and economic development is offering a package of incentives, including tax credits, financing support, workforce training, and faster permits to attract the company's proposed zero-emission vehicle project to Southern California. The office says the expansion would help advance its target of carbon neutrality by 2045. For the Philippines, this signals both opportunity and risk, showing local firms can compete globally in the electric vehicle space, but also raising questions on whether the country can keep high-value manufacturing here at home. Before we go, we have this to share. Members of a top business group sent this to us and asked to stay anonymous. This is the image. It's a strong message, and it reflects a growing frustration from some members of the business community. To be clear, this isn't about withdrawing support from those who genuinely need help, but it does point to a concern that many who work, pay taxes, and keep businesses running, they're saying they're not always seeing where their money goes. So the question is, does this reflect what more Filipinos are starting to feel? Is this a sentiment now spreading beyond the business community? And how widely is this view shared today? And ultimately, will our government do something about it? And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo News Channel.